What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, but nonetheless to go ahead and get it started here. First off, on the 4-hour chart, zooming in here, we can see that looking specifically, going all the way back to February, towards the end of February 18th, we saw these two important candles here where we see this high bearish volume candle printed, and then we see this immediately after this high bullish volume candle printed, a engulfing bullish candle. If we look here on the 4-hour chart, the last time that we see something like that would be going all the way back to here, so around December 30th, towards the end of December 30th of 2024, where again we see high volume vector towards the downside, a high volume bearish candle, and a high volume bullish candle here immediately afterwards. That then led overall from then to around January 7th, a 13% increase. Afterwards, clearly, as you can see here, Bitcoin did come down to make this double bottom, then move all the way up to around here, as you can see, around 109, 108,000 around January 20th, leading into the inauguration of Donald Trump earlier this year. Then ever since then, Bitcoin has been in this deathly boring downside action. This right here was rather interesting. It was consolidating, looked convergent, then ultimately Bitcoin went down here, then moved up towards around 106,000 towards the end of January, came down, and then ever since then, right here, leading into this most recent local low right here that I pointed out around 18th, up to now, Bitcoin sitting right here along the 200 estimated moving average. Everything really since the beginning of, specifically the February 3rd, has just been insanely boring, which is really this entire price action here. Ultimately, what has been happening, what's been going on, is the beginning with this initial false breakout here above. We can see this 200 estimated moving average, the white estimated moving average, and the also most notably here this 50 EMA in its band. There was this breakout that didn't really culminate in much, and then ever since then, really, it's been this deathly boring price action. It's just been borderline sideways with this slight downwards bias here, which has continually acted as resistance here. If you look here, there was this initial resistance going all the way back to December 16th, 17th, to around January 6th and 7th here. So far, this has been flipped into support. And what is most important here on this 4-hour chart is the fact that you can see as Bitcoin is up from around 93.3 all the way up to around 98.8 at this point, around 5.82%. We can see that this is the first time, again on the 4-hourly chart, the first time since February 3rd, February 4th, the Bitcoin is closed above this 200 estimating moving average here. And so far, you can see that it has come down. So far, it's finding support. It keeps bobbling. Last candle finally closing green. This current candle keeps going back and forth from being green. It didn't open not too long ago. It's been about roughly 14 minutes at this point. But if we go down to, well, before I do that, another very important thing to point out is if we look here, specifically segmenting off, going all the way back to here around January 20th, around 109, 108,000. We can see here on the RSI with the fib extension, the 618 here, this turquoise or this blue level here being ultimately the, also going down into the 0.5 range here. Generally, it would just be this entire range right here, acting as the suppression or the resistance so far. So if the last time Bitcoin was getting noticeably close to the 618 and eventually moved back above it would have been back here during January 14th, 15th, 16th, 17th, leading into, up into the 20th, it led into around $109,000, $108,000. This is when Bitcoin, zooming out to look at this entire, sideways, roughly, well, actually, it's not even roughly downside. I was going to say that initially, but which I'll get to at some point, but really this entire price action here has been ultimately ascending, making continuously higher highs, or not higher highs, but also higher highs with respect to here, but on the higher time frames, such as the weekly, it's not higher highs in terms of the candle closes, but what I meant to say was higher lows. Since the beginning, really this stagnation, this consolidation of price here, going all the way back to right here on November 11th to 12th, leading into where we are currently, with Bitcoin. It's been making higher lows. And again, as I said, the last time this was happening, where we saw this 618 right here, was when Bitcoin was heading into moving from here, from around the wick load around 89.3, 89.4 up to 109, $108,000, which in total was a 22, basically 23% move. So if let's just say something similar is met, then that would put Bitcoin all the way up to at least around 114, 115,000. Likely think if this is the time that we have all been waiting for, those interested in Bitcoin, those invested in Bitcoin and still thinking that the bull market is not over, then it's going to go far higher than just $114,000, $115,000. So that's also very important. Again, the 200 estimated moving average here needs to be broken with strength, and also this, as I pointed out, this 618 here is also going to be very crucial as well. But if we go down to the hourly, just want to specifically point out that we can see, zooming in here, this estimated moving average here, this violet here, the 800 EMA, we can see Bitcoin is broke above it, heading up to this around 98.8 is the local high recently. I mean, it's been finding support on it quite nicely, going back around 3, 6, 9, 12, around 12, 13 hours or so. Bitcoin keeps coming down to it, keeps finding support, which is quite nice to see. This is also, this 800 estimated moving average here is playing a similar role as a 200 EMA on the 4-hour, where you can see right here, there was this brief break above. You can see the 200 EMA here. This is continuously acted as support, going back to February 7th, right around here, going to February 14th, right around here. And this is the first time since this false breakout here that ultimately led into this deathly boring price action that we're seeing Bitcoin break above. And as I pointed out, over the last 13 or last 12 hours or so, continuously come back down to the 800 EMA and continue to find support here. We look here at the daily. Mainly, what's very important to me is the notion of the ascending zone here, this black zone that I've been pointing out in the last couple of videos or so. Again, you can also see the consecutive higher lows here, where this low here, in terms of the candle closes, this is what I'm going off of here, was 92,698. This next one here was 93,174. This one here was 93,565. This one here was 93,546. So there was obviously this minor, and it's borderline horizontal, but essentially overall from here leading up to where we are currently, specifically with the most recent local low in terms of the candle close is 95,411. So again, continuously setting higher lows, with this candle here back in February 18th, a few days ago, was in the context of where this candle was printed right here, as you can see, generally this being roughly here within the lows, which would be very similar to the two printed all the way back here around December 30th. So this one here and this one here, these violet or purple looking vector candles, in the context of being printed in the lows, signifies the decreasing of bearish volatility. So for example, as you can see, Bitcoin was heading towards around November 12th here, hitting around 93, 92K. Then the volume started to fizzle out a little bit. It started to die down. And from here on out, Bitcoin started just to gradually stair step towards here around 108,000 around December 17th. Then immediately as it starts to come down, we see right here another, not necessarily another, but a vector candle, a violet one was printed. Immediately afterwards, two black vector candles, as you can see here, were printed of high bearish volatility. So in the context here where we see at these highs, we see initially this violet vector candle printed here that the bearish volatility is increasing, and then afterwards we see these two bearish, these high bearish volatility or vector candles printed, following through with the fact that this violet candle here was insinuating or implying, indicating that the bearish volatility in the volume was about to increase, which was then followed through with the high volume bearish vector, which wicked all the way down to around 92, basically 92.2K, which is, you can see here, wicked all the way down basically to the lows. There were these, mainly this wick right here around like the 13th and 14th of January that wicked a little bit lower, but for all intents and purposes, this wick right here of the final high volume bearish vector candle on the 20th of December of 2024 acted as the low here, as you can see. Afterwards, we saw this violet vector candle printed here, most notably, and then also this one here as well. And the micro, the local lows, which in this context, as you can see, so we had this violet candle here, then flip down to the local lows. We have these two printed here, most notably. Flip back up towards the upside, then we have two vector candles here printed, the violet ones, the increasing volatility here. Switches towards the downside, we see a high volume vector candle here of a black nature. Then it wicked all the way down to 91.5, which has been the lowest so far of this most recent downside since the beginning of February. Fast forwarding to here, February 18th, we saw another violet vector candle here, and the lows, which would be synonymous or correlative to these two going back to here. It's December 30th, and then here January 13th. And really what puts the icing on the cake here is the fact that here on the 20th of February, this yellow vector candle right here was printed. This is the only, outside of this one right here, which this one going back to the December 4th was basically in the exact same zone right here. So the last time we got a yellow vector candle akin or relative to the one that we saw around 24, 36 hours ago would be comparative to December 4th, which once that happened from that prior local low to the top was, well, 15.66%, so anywhere from around 15 to 20%. So again, that's going to take us anywhere in terms of for Bitcoin up to around basically the prior local highs around 108, 109,000, up towards 20%, which would put it around under 13, under 14,000 relative to what I mentioned on the 4-hour chart. So this is all looking quite nice again. So we're seeing this bounce. The vector candles are looking very nice along this ascending black resistance. There's also this daily longer term resistance here in blue that I've been pointing out recently. That's really the bottom of the barrel for the uptrend since mainly these two local lows going back to August 4th, August 3rd to here around September 7th, around the 7th, 8th, 9th, 10th. So basically when Bitcoin was ranging from around like 57,000 here all the way down to the $49,000 wick low. Ever since then, Bitcoin clearly has continued to find support along this blue zone. Bitcoin's finally entering it, again with the vector candles in that context that I pointed out, along with this more shorter term ascending support here. If you look here at the weekly chart, something I mentioned in a community tab post within the last few days was the fact that the bullish flag here of a pennant variety characterized by the descending resistance here and the ascending support, also characterized by descending volume, which we can see right here. So everything is lining up for that pattern of the pennant flag, that is. And the crucial thing that I was mentioning was the fact that the current Bitcoin weekly candle, which when I was saying it was somewhere around like 5.5 days left, now there's 2 days, 16 hours left, and I was mentioning that if Bitcoin was not going to see a fake out of this pattern, in the sense that a fake out would be just a brief deviation below the pattern, then it ultimately would break back above and continue to go higher. If Bitcoin's not indeed going to see a fake out, then this current weekly candle, which it is doing so thus far, as you can clearly see right now, it is green. It needs to flip green, is what I was saying. I really just to point this out because this is very important. The 13 estimated moving averages, or the moving average on averages, the red EMA here, as you can see, was respected here, moved up to around March, April 2023. We can see here, and this was also right here, as I've been pointing out. This is Q1 of 2023. Fast forward to Q1 of 2024. Right here, the intermediate consolidation was respected along here, as you can see. The 13 estimated moving average, again, the red line moving up here, as you can see, towards March, April 2024. Fast forward to 2025, Q1. What Bitcoin has been doing here is consolidating intermediately, the midway point in between each of these bullish legs of the 5-stage bullish impulse that has characterized the current bull market for Bitcoin is, as you can see here, finding, so far at least, obviously things can change in the next, over the next week or so, roughly over the next few days. So far, it's finding support along the 15 estimated moving average. This trend temporally and price structurally speaking is continuing to validate thus far. But so far, this is looking absolutely fantastic. Finding this bounce is just further fortifying the overall bullish structure of not only this pattern, but obviously what I pointed out here on this weekly chart. What did I point out here on this hourly chart with the 800 estimated moving average? What I pointed out here, more importantly than the hourly, on this 4-hour chart, again with the 200 estimated moving average, with the 618 down here. As long as Bitcoin can get above that, it's going to look fantastic. At this point, Bitcoin wicking up to around 98.7, 98.8 at this point is, again, it's very good. It's looking quite nice. The fact that this is the first time that it's actually closed above the 200 estimated moving average is, again, I mean, it's fantastic. It really can't be overstated, but it's not quite out of the water yet. It really needs to get back above mainly 100,000, which is generally going to be right around this area, roughly right here. Generally, it's just the top of this orange zone. Specifically, the top of this orange zone is around 101, 102,000, which correlates really with this descending resistance here of the black zone. Again, like I said, 100, 200, 3,000. There's also this vector zone right here, which is from around basically 103,000 all the way up to 105.5 thousand. There's also this smaller vector zone here at the prior local highs, or at this point all-time highs, around 107.3 all the way up to around 108.1, and then obviously with the wicks up to around 109.4. So lastly, moving here into this weekly chart, which I went over for the first time in the last video. Obviously, this is the ascending, as you can see here in yellow. We see the ascending uptrend of the current bull market, where we see this channel drawn from the high here, which would be this right here is the first move, so 0 to 1, then 1 to 2. This is a 5-stage impulse wave, and with respect to the L8 wave analysis, moving up here to 3 towards, again, the top of the ascending channel, down to 4, and now moving up to, theoretically speaking at least, the 5th and final wave or final move of the current bull market structure, where obviously the bottom of this uptrend is going to be set with the low here most recently. In terms of the candle close, down to around $54.6 thousand. And as I was pointing out, most importantly with this, the overall 5-stage impulse here, where each of these, here 0 to 1 is characterized by an ABC move, 2 to 3, another ABC move, and then 4 to 5, again, theoretically, but according to the structure, which has already been validated. Well, really, obviously here from 0 to 1 set the precedent, and then from 2 to 3 here was validating it once. So obviously if it happens again here, it'll be validating it for the second time. But overall, we're seeing the third move structurally. But what's most important here is when we see from here 0 to 1, then we see from A down to B, hit the 0.5 of the channel, moved up back towards the top. Then from 1 to 2, the first correction of the 5-stage impulse. Then again, we see from 2 to 3 as an ABC structure. This time it moved around to the 618 instead of the 0.5, then moved up to 3. Again, 3 to 4, the second major correction of the 5-stage impulse. Then we see another move up here towards the upside, where we see 4 to 5 is then characterized, obviously theoretically speaking, as it fully played out at this point. We see A, then we see down to B, then instead of moving to the 0.5 or the 0.618, now it's moved down to the 0.786, then moving up to the C or the 5 towards the top of this ascending zone, which, depending upon what happens, I think at this point late March is earliest. I don't think that's really too reasonable or feasible at this point, but late March is the earliest I'm expecting, or would project, at least, to use the term expect would be not necessarily proper, but projecting at latest like late March. So that would be, if it continues to respect the ascending resistance trend, then that would be somewhere around like 180,000. But moving into June, late June would be somewhere around like 220 to 230,000, which again validates many points of technical analysis, the historical Fibonacci extension, various other things that I've gone over in more recent videos and past videos over the last number of months. I mean, going back even over a year at this point. But again, so we see we see the 0.5 here from the first B. Second B is 0.618, and then this third B here is the 0.786. So we're seeing a trickling down from 0.5 to 0.618 to 0.786 of the most important, most notable Fibonacci trends, which is just, obviously it doesn't mean that it's going to bounce here, but it's nonetheless very interesting at the end of the day to see that continuing to play out. One thing I also want to point out here is if we go to the index chart here, which it might, I think it's actually here on this layout that I have. I wanted to point out the MACD here. So this was one of the big things that I spoke about. I have a post, it's my, I believe, if not, it's my second most, but I believe it's my most recent post for Bitcoin where I went over this MACD here. I went over, which this is on the wrong layout. It's supposed to be on the 9 period. Where we're seeing here on the RSI, we're seeing here on the stock RSI, and I'm not really going to bother to explain this in this video, but we're seeing all these things here looking at the RVI. We're seeing all these very important things, very similar to the past intermediate consolidations just pointed out here by each of these arrows and the time periods, specifically Q1 of 2023 to 2024 to 2025. But recently, as the current weekly candle opened up and then it continued to go down a little bit, we saw the MACD. As you can see right here, it was currently a bit lower than it was currently. But as we're seeing Bitcoin continue to, obviously, it's looking green right now. It was red. It was actually towards the downside. But since we are seeing it look more and more green, since we're seeing this movement towards the upside, which is looking very, very promising, obviously, at least right now so far, it could change in the blink of an eye at this point. We could see a further retracement, as I've pointed out. But right now, this is currently looking as if, obviously, looking at the hourlies, I've gone over the 4-hour, the daily, the weekly, the 2 weekly charts I've gone over, looking as if Bitcoin's wanting to, I keep clicking the wrong button here, looking as if it wants to manage to sustain and affirm this ascending support here, which again was the intermediate consolidative support going back to Q1 of 2023, Q1 of 2024, and now currently Q1 of 2025. And again, that is where my current bias sits. I do personally think that we will see Bitcoin overall uphold and affirm this structure that you see here for the final time, leading anywhere as highest, well, rather beginning at lowest around 180,000, at highest maybe, like 260, maybe, it's 300,000. Obviously, there's plenty of people that are saying that, Bitcoin's going to hit, 300,000 or 500,000, maybe even a million, which I think is this time around at least quite, I really don't think that's, there's any logic in entertaining that whatsoever right now. But generally 180,000 to 300,000, more specifically around 180,000 to 230,000 is where I'm looking. One thing I do want to point out quickly before I end this video, is, which I forgot to point out the last time, was that if you look here at the white line specifically, so the 5-stage impulse, you can see here that 0 from 1, you can see that this intermediate portion right here led through the first bottom of this A to B. If we go to the second A to B, or from 2 to 3, of the 5-stage impulse, we can see that this line also led to the first bottom right here where we see this movement. And then if we look here from 4 to 5, where Bitcoin currently is in this stage of the impulse, we can also see that from 4 to 5 here that this white line is also leading in right along the first bottom of this overall bottom here. So we're also seeing that lineup, which I point that out to emphasize the fact that where this 4 to 5 ends, so right here around like somewhere, just generally sometime in June, around like $220,000 to $230,000, continues to uphold the current structure of the Bitcoin bull market to a very sound and approximate in terms of it, having self-similarity and looking very much so like it did during past performances, such as the 0 to 1 here, and the 2 to 3, and then obviously now the 4 to 5, where we're seeing this white line go right through the first bottom of 0 to 1, the white line from 2 to 3 go through the first bottom, and then from 4 to 5 we're seeing the white line, the impulse line, go through the first bottom. But as I said, that was the last thing I wanted to go over in this video. So as always, none of this is meant to be financial advice, but all that being said and everything gone over, I hope you all enjoyed, and I hope you all have a wonderful day.
Ooh, I regret now.